This episode is brought to you by NordVPN. It's the service that I use to protect myself on the web, and they have this special offer for my viewers. 75% off a 3-year plan. Simply go to nordvpn.com/companyman to get it. Oh, and for a short time, you can use the code COMPANYMAN to get 1 extra month for free. It's all in the description. Hey everyone, are you familiar with Party City? You know what, I'll get to that in a minute. Let's just get this party started. Alright, what do we need? Drinks and snacks, of course. Maybe some music? Turn that up a little bit. Maybe some flashing lights? Alright, no flashing lights, I get dizzy. And you know what a party really needs? A bunch of party-themed nonsense. Napkins that say happy birthday, and party hats, balloons, confetti, you know what I'm talking about. And where do you buy all that stuff? The party's over, by the way. But seriously, where do you buy all of it? Because there's not that many options. Sure, you can go to Walmart or some other local store and see what they have to offer, but it'll be limited. If you want to do it right, you gotta go to Party City, because, well, nobody has more party for less. Right now, they are by far the largest chain of these specialty stores. Go ahead, try to think of another one. I guarantee anything else you can think of is either significantly smaller or out of business completely. In 1986, there was a man named Steve Mandel, and he spent the last 14 years of his life as the president of a firm that others would hire to sell their products. Some of those products were these party supplies I was talking about. He saw that there was no major competition in that industry. Like I said, the local stores would have a section dedicated to it, but it wasn't their specialty, and any store where it was their specialty was a small independent store. Steve gathered together $125,000 and opened a fairly small location in New Jersey. He called that store Party City, and that was the start of it. Now, very early on, it became apparent that Halloween was going to be a big part of their business. So much so that Steve decided to dedicate a quarter of his store just to Halloween products. And he would stock Halloween products all year round. It looked like he was right about there being a demand for stores like this because it was successful from the very beginning. After a couple of years, he started franchising locations and opening more of his own. A large emphasis on franchising helped the chain grow to 58 locations by 1993. At that point, he started taking it easy on the franchising a bit and put more of an emphasis on company-owned stores, but either way, after only 10 years of business, in 1995, they had 148 locations that generated over $23 million in sales and over $1 million in income. This is some crazy expansion. There's evidence that shows that children's parties, along with parties in general, were becoming more popular over this time, which would expand the market for their products, which is always good, but it was really good because there was very limited competition in that expanding market. Early in the next year, they became a public company when they sold 1.7 million shares for $10 each. They used the proceeds to help fund the opening of an additional 52 locations. That year, their revenue had reached $48.5 million with $3.76 million in profits. In 1997, it's a similar story. Just let me give you a few more numbers. The opening of 75 more stores helped raise their revenue to $141.7 million, and their profits were now $7.7 million. Steve Mandel was still in charge, and at this point, he said that their plan was to soon grow to 1,000, possibly 1,500 locations in the near future. Remember, when they first sold their stock to the public, the price was $10 a share. In early 1998, it was up to $34. That's where things took a turn. Within about a year, that stock price was down to $3, and they were considered to be on the brink of bankruptcy. So, what do you think happened? An obvious answer is that they were expanding too quickly. I mean, this is some aggressive expansion, but how would that be harmful? They jumped headfirst into an industry that was mostly untapped and arguably expanding. You might guess that a competitor caught on to their success and started challenging them. Well, who was that competitor? As I said in the beginning, they still don't have much competition 20 years later. Through all of this, their sales were growing due to more locations opening, but also their sales at the existing locations were generally increasing as well. They were pulling in more profits than ever before, so why would expanding like this be harmful? Now, admittedly, there were some issues meeting earnings expectations, which is never good when it comes to stock price, but their real issue was internal more than anything else. They had expanded so quickly that they failed to have proper systems in place to track their inventory, which I know doesn't sound nearly as bad as it actually was. Here's how the stock market works. You're free to buy all these stocks, but how do you know which ones are going to go up? Well, you don't, but how do you make an educated guess? You generally look at the reports that they release, the 10Qs and the 10Ks. Those have all the information you need to know about how they're doing. The company puts them together, the auditors come in and do their best to assure that it's all accurate, and then the potential investors can use them to decide whether or not they want to invest. These reports include their income statement and balance sheet and everything else. One of the items on the balance sheet is inventory. The company needs to have a handle on their inventory so they can report it on that balance sheet. And then the auditors can come in and make sure it's right, and the potential investors can use it to help determine the state of the company. Since Party City didn't know what their inventory numbers were, the whole system fell apart, and they had to delay the release of their report by a few months. When a report is delayed by months, it's detrimental to that stock. The investors get very nervous because they have nothing to review and determine the state of the company, plus just the fact that it's delayed must mean something's up. In addition to that, debt covenants. When a company takes on debt, the people lending it to them often have conditions that have to be met. Maybe part of the agreement will say that they have to maintain a certain level of profitability, or the current ratio has to be in a certain range. When Party City failed to release their statements, they broke these agreements, since there was no telling if they actually met these conditions or not. Plus, once they did file the reports, they were so adversely affected by all of this, they failed to meet some of the requirements anyway. To support everything I just said, here's a few statements from the late report that they filed in July of 1999. The company was unable to issue audited financial statements for the year ended December 31st, 1998 and timely file its 1998 annual report on Form 10K with the SEC, primarily because of difficulties associated with taking the year-end physical inventories and the related reconciliation process. Then skip ahead a sentence. As a result of failure to file the Form 10K by March 31st, 1999, the company was in default of NASDAQ's continued listing requirements. Trading in the company's stock was halted on May 6th, 1999, and the company was delisted on July 20th, 1999. That's a word you don't want to see. Delisted. And then the second paragraph says that they changed their fiscal year as a result of all of this. This was clearly very bad for them. As a result of the financing agreements, the second paragraph, the company's failure to issue its consolidated financial statements on a timely basis is a default under the credit agreement. In addition to this default, the company did not meet certain of its financial covenants, including those related to minimum levels of profitability, net worth, liquidity, fixed charge coverage, and others. Consequently, the company's debt was subject to acceleration. It goes on from there. It's amazing how affected they were by this inventory incident. And then there were also class action lawsuits being filed that claim that some previous information in these reports was either false or misrepresented, in addition to accusations that some insiders sold their stock just before the delay was announced and the stock plummeted. These were bad times. They were in trouble with the SEC, the exchanges, the investors, the creditors, and had very little money remaining to operate their business. Let me tell you what brought it back, because it was three major things. One, they got rid of Steve Mandel. He was the chairman and CEO through all of this. It's unclear how much was his fault, but he was in charge when it happened, so letting go of him instilled confidence. The second thing, they raised almost $10 million by selling a bunch of company-owned stores to franchisees. The third thing was probably the biggest. guest, Michael Tenenbaum. He's an investor that arranged this huge deal that provided the company with $37 million through both the sale of stock warrants and loans. From there, the company was able to get back on track. They returned to the stock market, started tracking their inventory properly and filing their reports on time, and today are bigger than ever. This episode was originally going to be part of my Bigger Than You Know series because Party City is huge. I still want to make that video in the future, but for now, I'll give you a brief overview of their continued expansion. Back when they were going through all those troubles, they were hanging around below 400 locations. By 2005, they were over 500, and they were taken off the market when they were bought by some private equity firms. This is when they were joined with other companies that helped strengthen their business. As a result, today, they're very vertically integrated, meaning most of the products that they sell in their stores are made and brought to them by businesses that they own. That's the part that I'll focus more on in the future, but for today, I'll just say that they currently have almost 900 locations. They're mostly in New York and California or somewhere in the Midwest, but they're everywhere. They have locations in 46 states and even some in other countries. I also want to mention their continued reliance on Halloween for two reasons. One is because I find it interesting, and two, because it's Halloween. Well, maybe not for you as you watch the video, but this was posted on Halloween. Happy Halloween, everyone. I found it interesting because for almost all other retailers, Christmas is their busiest season, but not for Party City. 20% of all domestic sales are Halloween related, and they own Halloween City. It's one of those Halloween stores that pop up in abandoned buildings every year. In 2017, there were 272 of them across the United States. Let me know in the comments, do you want to see that follow-up episode that talks about how big they've grown? But more importantly, what do you think of that rise and fall and rise again, specifically the fall? It's amazing how impactful something like failing to keep track of inventory can actually be. Like I said, it wasn't the entire cause of their issues, but it was a big part of it. And any other thoughts you have about any of it, please leave them in the comments. I'd like to hear what you have to say. And can I talk about today's sponsor for a minute, because this is important. It's NordVPN, and they offer security on the internet. When you're on the web, all your information is out there. People can learn your location and passwords, and that's scary. I hear reports about this all the time. Hackers are after your air miles to sell on the dark web? Come on now. I don't want to have to worry about this. And I have things that I want protected that are more important to me than my air miles. NordVPN protects against all of it by using military-grade encryption. It's so easy to use. I just switch it on and it's doing its thing. You can connect it to super fast servers in 61 countries. There's no data logging. You can have up to 6 connections at once. The bottom line is I feel safe. For my viewers, they're offering 75% off a 3-year plan. Just go to nordvpn.com/companyman, plus you can use that code companyman to get 1 extra month for free. It's in the description, and thank you for watching.